different branches of accounting. There are the different branches of accounting, and among them the cost accounting, management accounting, financial accounting, auditing, social accounting. But I think the important one is cost accounting, management accounting, and financial accounting right now. So what is cost accounting? Cost accounting deal with the ascertaining the cost of the product and service. What is cost accounting? The cost accounting is a part of accounting which mostly deal with ascertaining, means to identify or to ascertain the what the cost of the product or service will be. That is the cost accounting. Now management accounting. What is management accounting? Deals with the accounting service related to the management, means the every accounting service that is related to management. Management means a control, right? A control in the company, or to control the office of the company, that is a management. So whatever the accounting service that is related to management, that is dealt by the management accounting. Financial accounting deal with recording, classifying and summarizing the transaction, and also with preparing the routine financial statement and analyzing and interpreting the same. What is financial accounting? Financial accounting that deals with the recording, classifying and summarizing transaction. What the transaction? First we record it, we classify and we summarize it, we prepare it in a report, and also with preparing the routine financial statement, means for a specific time period, that may be the for the mostly for the 1 year. There is a financial statement, and analyzing and interpreting the same, means after what we prepare the financial statement may be must be prepared for the specific period. First we record, we classify and summarize the transaction, and we prepare in a report form financial statement, and then we analyze and interpret the same. What is auditing? Deals with appraising accounting activities, means to judge the accounting activity, that is auditing. And social accounting aims at accounting for the national income and expenditure and socio-economic analysis and so on. That aims for the accounting for the national income and expenditure and socio-economic analysis and so on, that is social. Financial accounting, income, expenditure, asset and liability are the subject matter of the expense in case of any business, means they are the main. What are those words? That are income, expenditure, asset and liability. Income means whatever the revenue, that is the income, and whatever the expenses, that is expenditure. And what is asset? Asset means the property of the company, and liability means the company that is liable to pay. That is, they are the main subject matter for the expense in case of any business. For the expense of the business, they are the subject matter. What is the subject matter? Income, expenditure, asset and liability. What is financial accounting? Financial accounting consists in recognizing transaction relating to the income, expenditure, asset and liability during a given period of the time. What is financial accounting? Financial accounting consists in recognizing the transaction relating to the income, expenditure, asset and liability, means income, expenditure, asset and liabilities related. What are these transactions? In recognizing, the financial accounting deal with, that is a financial accounting consists in recognizing the transaction that is related to the income, expenditure, asset and liability during the given period of the time, recording them in a systematic manner. Then we record it. First we recognize the transaction, whether it is related to the income, expenditure, asset and liability for the given period of the time, and then we record them in a systematic manner, classifying and condensing them. Then we classify, and then we prepare it in a condensed form, that is in short form, preparing the financial statement and regularly and supplying the accounting information to the owner, manager, policy maker, and also those who are interested therein. First, we classify the transaction, that is whether it is related to the income, expenditure, asset and liability, and then we classify them, and then we record them. First we recognize them, and then we record them in a systematic manner, and then we classify and condense them, we put it in a short form, that is in a financial statement, and then we supply it to the one, that is the owner of the business, manager, policy maker, and those who are interested for the business, who are interested in the business, they may use it. That is a financial accounting. Cost accounting, the part of accounting employed in classifying the present and future expenses, recording of the expenses, apportioning the expenses, summarizing of the expenses, and preparing the report is called cost accounting. Cost accounting is also part of accounting because they are the branch of accounting. First financial accounting, cost accounting, management accounting, auditing, social accounting, but the main one are the financial, cost and management accounting. Now the second part is cost accounting. What is cost accounting? Cost accounting is a part of accounting which is employed in classifying the present and future expenses. What are the present expense of the business and what is the future expense of the business? They are employed in classifying those. And then recording of the expenses. First we classify whether the expense is related to the present or future, and then we record them. Apportioning the expenses means we divide it, we distribute the expenses. Summarizing of the expenses, then we summarize in, we summarize it, and we prepare the report of that, and we prepare the report. We prepare the report. That is called cost accounting. That is cost accounting. Cost accounting is mostly that is first it classify the whether the expense is related to the present or future, and then we record the expense, and then we apportion the expenses. Means apportioning means to distribute the expense, and then summarizing of the expenses, and then we prepare the report. That is called cost accounting. Extra for the cost accounting, marginal cost. The term that is used in the cost accounting, that is a marginal cost. What is marginal cost? Determined by analyzing the expense into fixed and variable. Means we first expense, because cost accounting is mostly the cost. What is cost accounting? Is to classify the present and future expenses. That is a cost accounting. But the financial accounting means the transaction. First, to classify the transaction with financial accounting, the main four term, that is the main subject matter of the business: income, expenditure, asset and liability. First we classify the, in case of financial accounting, we classify the whether transaction is related to the income, expense or expenditure, or the asset or liability, and then we record it, we prepare the report. That is a financial accounting. But in case of cost accounting, cost means the expense. What is cost? Cost means expense. Cost means, so we, in case of the cost accounting, we classify the way that the expense is related to the present and future, and then whatever the recording, whatever summarizing, classifying, that is not related to the expense only. So in case of the cost accounting, the extra point is marginal cost. What is marginal cost? First we analyze expense may be fixed and variable. Fixed means the expense. For example, if you are renting a house, right, and you are paying the rent per month, that is a fixed rent. It's fixed. For example, rent is fixed for the 5 years, so per month rent is fixed. That is a fixed expense. But variable expense are those expense that is that may changes. That is electricity bill. The electricity bill that you pay for per month may be changed per month. It may not be same regularly, it may not be same in every month. So that is a variable expense. The expense that can be changes, that is variable, and those which are fixed for a certain period of time, or for that is normally fixed, that is a fixed expense. Contribution. Excess of the selling price over the marginal cost. What is marginal cost? Marginal cost is to classify or to analyze the expense. Means to analyze means to like determined by analyzing the expense into fixed and variable. Means to analyze means to identify whether the expense is fixed or variable. That is a marginal cost. Now contribution, whenever your selling price is excess of the marginal cost, means marginal cost. For example, marginal cost is 10 rupees and your selling price is 15 rupees. So here come that selling price is more than the marginal cost, that is 5 rupees is more than, that is called contribution. Whenever the excess of the selling price over the marginal cost, the excess of the selling price over the marginal cost, that is a contribution. So the contribution is, that is a selling price, means selling price is 15 and your marginal cost is 10 rupees. So the 5 rupees is a contribution, that is a contribution. Break even point, that is also extra point of the cost. That is the point where no profit or no loss. Means such point where neither you are gaining nor you are losing the income or revenue. Neither you are gaining revenue or nor you are gaining losing the revenue. That is the point where you are not facing any losses or you are not gaining any income. That is point is known as break even point. The point where you are neither gaining nor losing, that is a break even point. The point where no profit and no loss. Advantage of cost accounting. So the basic point, that is help the government to control the price level, help an organization to fix the price of the product to be produced in the future, helps the management by supplying necessary information and ensure the proper use of organization resources. That is the advantage of cost accounting, that you need to, that government it helps to the government, because it mostly deal with the cost, it mostly deal with the expense. So it helps the government to control the price level, help the organization to fix the price of the product and to be produced in the future, helps the management by supplying necessary information, ensure the proper utilization of the resources. Disadvantage, it is expensive, right? It is expansion, sorry, this is wrong one. It is expensive. It required the expense to prepare the infrastructure, separate cost accounting division to appoint specialized staff, because whenever there is a cost accounting, then you require a separate department, right? That is infrastructure, separate cost accounting division, right? And to appoint a specialized staff means the cost accountant, you need to hire the cost accountant, that is a you require expense, and it require initial capital expenditure. Mostly whenever you are preparing the cost accounting department, then initial capital expenditure incurred, that is a disadvantage of. In an organization, information and control based accounting at different level of management is called management accounting. What is management accounting? The accounting that is deal or that is related to the information and control, that is management. So at management has a different level, there is a different level in the management in the business. So that the different level of the management, the information and control accounting, that is the management accounting. Characteristics of management accounting: it is a technique only management accountant control information from the financial accounting, cost accounting and outside sources. Means it is a technique only. Management accounting is just a technique where the management accountant collect the information from whom? From the financial accounting, cost accounting and outside sources. The management accounting become busy with the futures and supplies suitable information to the management so that the appropriate decision for the future course of actions can be taken on the basis of the informed judgment. Means the management accounting become busy with the future and supply the suitable, what are those suitable information that need to be supplied to the management that deal with the management accounting, so that the appropriate decision may be taken for the future of the course of business on the basis of informed judgment. And the management accountant supply information for decision making, but he never suggests what decision should be taken. Means they only supply the information that whenever there is a decision making, they never suggest the decision, but they supply the necessary or suitable information only, but they never suggest. That is a management accounting deal with. And the management accounting considers the relationship between the cause and effect. They only consider the relationship between cause and effect. They never suggest the decision. They only supply the suitable information. That is a management accountant only supply the suitable information. They never suggest the decision. They consider the relationship between cause and what are the cause, what are the effect. This management accounting is a technique only. They collect the information from the financial accounting, cost accounting, they are the characteristics and other sources, and the management accounting become busy with the future and supply the information to the management accounting, suitable information, so that the appropriate decision can be taken. That is the management accounting characteristics. Now the objective of management accounting: to help the management in respect of planning. Of course, management means control, that is the planning. So that is helps the management in respect of planning to submit all the accounting information to the management, creditor, investor, government, etc. All this accounting information management accounting deal with, their objective is to submit the all accounting information to the management, creditor, the one to whom the company owe, investor, government, etc., to help the management in controlling the affair of the organization, and to help achieving the coordination between different departments. Now the advantage of management accounting: for future planning, all the information can be easily obtained. Yeah, whatever information you want to obtain, you can be getting it for the future planning. Discipline is established, I think, yeah, among the employees. Discipline establishment, I feel so, among the employees. The information compiled for the outside world create attraction for the organization. Yeah. For the decision making, suitable and dependable financial and non-financial information can be obtained from the management accounting. For the future planning, all information can be easily obtained through management accounting. Discipline establishment among the employee. Yeah, this is the biggest control. It deal with the control. Information compiled for the outside world create attraction for the organization. Whatever the information that is compiled for the outside, what is information that is important for the outside world, create attraction for the organization. And for the decision making, suitable and dependable financial and non-financial information can be obtained from the management accounting for decision making, because the management account only supply the suitable information but they never serve the decision. So for decision making, suitable and dependable financial and non-financial information can be obtained from the management accounting. Disadvantage: introduction of the management accounting system is costly. How? Like same, it is expenses in case of the cost accounting, and they are also the costly. Initially, the some capital expenditure are also required, same as to the cost accounting. Management accounting cannot be success unless there is a good coordination among various departments, because they are the different level of department. What is management accounting? Management accounting means the information and control based accounting at different level of the management, because the management have a different level, so the coordination among the different level of the department, management accounting cannot success if there is no coordination. And the management also take much time to realize the necessity of the having management accounting system. So the management also take the much more time to whether the business or whether the entity require the management accounting system or not. So that is, they are those management accounting. So they are the notes of the chapter 1, nature and scope of accounting. It is finally completed, chapter 1. Now I am gonna start with chapter 2. So chapter 1 is fully completed.